What data are you looking at that shows you that we're seeing maybe a slowdown in the global growth story?
Look, we have seen a slowdown in kind of a peak in the PMIs, I suppose. I don't think you can call it a slowdown yet, but I think it's enough globally. And of course, we had weaker numbers in Europe particularly, but globally there's enough, I think, in the forward indicators to suggest that at best global growth is flattening out. And I think that brings quite a different market environment with it.
So tell me about that market environment. How will a less favourable global backdrop impact Asian markets if that is indeed the case?
Well, I think the issue is against that backdrop, the Fed's likely to keep tightening. I mean, if you think about the fiscal stimulus which is coming through in the US, if it's had one impact, it's to make the Fed much more confident and convicted about the sort of tightening it needs to deliver. So it doesn't look like it's going to be like last year where the Fed litigated and debated every move. This year it's likely to be much more certain. So I think a bit of slowing in global momentum means we're going to get a slightly stronger dollar against some of the currencies in this region, and I think asset markets are going to have a more difficult time.
So time to sell in May and go away?
I don't know whether we'll go away, but I think what we saw in early February was in equity markets was a sign that the cycle has shifted pulse, I suppose. We've gone from that very expansionary growth upside surprise low interest rate environment to one where actually growth has been above trend for quite some time, and rate hikes are coming through. And not just in the US, although that's obviously the key part of the rate hike story. And I think that means the asset market performance at best is going to be more volatile on a forward-looking basis.
Trade and geopolitical risk also on the radar throughout the course of Q1, but are you encouraged to see a thawing of tensions on the Korean Peninsula now, and what does that mean for markets?
Look, that's obviously good news. I don't know that Korean assets ever had that much of kind of a North Korea premium in them, so that being removed is good news. I don't think it changes the investment landscape all that much. I think the broader strategic issue is that we're probably not going back to the sort of very harmonious global trading environment we had 3 or 4 years ago, where there was broad acceptance of free trade, broad acceptance of multilateral institutions. I think the mistake some people are making is pinning what we're seeing entirely on Donald Trump and looking to him to potentially move away from some of the more extreme positions. That may happen, but I think as a general proposition, we're in a more complicated and sceptical environment of globalisation, and I think that's with us for a while.